What's going on, everybody? This is Jack with the Trading Tribe. Super excited to be back at it today with another strategy session. Hopefully, this is really valuable for those traders out there. And really, regardless of the level you're at, I wanted to make a session today covering risk management. This is a really big topic when trading because obviously we're going to make money in trading, but we need to protect that money, right? And really have a strategy around risk. So I think this is going to be really valuable for those out there, regardless of where you're at, kind of in the stages of trading. And feel free to like and subscribe to the channel. We got a lot more of this coming in the future. So hopefully this video is valuable and really any other you run into in the future are as well. And today we're going to look at natural gas. This is my bread and butter when trading, so just easy. These are the days I'm actually trading, so it's nice to kind of use this instrument. But these concepts with risk management really can be spread across any instrument. So if you're trading stocks or you're trading options, right, the risk management kind of ideas and concepts are really the exact same. So on this kind of video today, we're going to actually look at a downtrend. So something to keep in mind. On this day, our team actually shorted, but just interesting to kind of hear out how we think about risk and how you want to think about risk when trading. And there's usually about two different camps in the trading sphere on what they think of risk as, right? So there's some people that think risk management needs to be a certain portion of your account that you're comfortable with losing. And I do like that theory, and that's what they call cutting losses quick, right? So if you're in a trade and it goes against you, a lot of people think to just cut the trade, right? I more so am in another camp where we call it cutting losses intelligently, right? So I do sometimes take a bigger loss than a small chunk of my account, right? As long as it's worth it compared to the reward the trade would give as well. So on a day like this, right, if we're taking a trade and it's a downtrend, right, it's making lower lows and lower highs. VWAP, which is this middle white line, is actually acting as a really clear ceiling on the day. So I really like to use VWAP when trading. This typically acts as kind of that volume weighted average price. So think of this as a good deal to short on a downtrending day. And you'll notice, right, every time it popped up to VWAP, it fell. Popped up to VWAP, it fell. And if we just do a drawing tool to see the profit potential here, and we'll go to 6 in the morning Central, because that was kind of a recent time it came up to VWAP. If you were to short here and get out early, let's just say we got out on this dip, that is 165 ticks, which you can see in that little rectangle. And in futures, you multiply that by 10 with natural gas. So per contract with just this move, right, you can make almost $1,700. And that's per contract, right? So tons of monetary potential here to just keep in mind. And this is why, right, we don't necessarily just want to cut losses quick, right? We want to give this some wiggle room because it's worth it, right? If a trade can make you almost $2,000 in an hour, right? You want to give it some wiggle room because your entry is never going to be perfect, right? So on a day like this, we are kind of coming up with the theory that VWAP is going to be pretty close to that ceiling. Sometimes it doesn't come up to VWAP, so you have to kind of factor that in when you're trading. But when natural gas came up to VWAP, this was actually my first trade of the day. This was my second trade of the day. And when we short here, I like to think of risk as where would we be wrong, right? So whenever I'm taking a trade, I'm always trying to think of what area on the chart would make me wrong or would make my idea invalid, right? And if my idea is VWAP, which is this middle white line, is going to be the ceiling throughout the day, which it ended up obviously being perfectly today. As an example, when I get in a trade, let's just say we get in here, I'll mark that down. I want my stop loss to be a good bit over VWAP, right? Because all day it hasn't gone above VWAP. So we're kind of banking on that, and that's where we want to put our risk, right? We want our risk to be based on that theory as well. We also want our reward to be based on that last low. So when we're taking a downtrending trade, we expect it to keep going down, right? So my target was around here for the trade. And when I'm taking a trade, I want it to be at least a 2-to-1. So in this case, right, this could make you $1,600. So the max I would be willing to risk is 800, the max, right? And that's only if you want to get really aggressive. On a trade like this, right, if you get in at VWAP, you don't have to give it $800 of risk, right? On this given day, I actually only gave it like 400. So I gave it 40 ticks of room, which put my stop loss right about here. And we can mark that down with a drawing tool. But my stop loss was right about here. And if we think about that, right, here's our entry. And let me mark this down pretty clearly. Here's my stop loss, and here's my profit target, right? So when we get in that trade, here are kind of those three orders. I have another video on my channel teaching you how to do these automated bracket orders. So definitely check that out for more kind of instruction here. But these three dotted lines that I've dropped on the chart are really what my orders were at this point. And the way you want to think of risk is, right, if it goes up to 6.645 and taps this level, not only is it going to get us out, but we want it to get us out, right? We don't want to be in this trade anymore if it breaks VWAP pretty substantially, because VWAP is our trading idea, right? It's a downtrend. Shorting at VWAP has been very successful all day. So if it breaks VWAP by a bunch, we don't even want to be in the trade anymore. And that's really how you want to think of it. This second trade was almost identical. So it made that lower low, which shows a really healthy downtrend, and it came back to VWAP again. Obviously, this trade offered a little less potential just because this margin isn't as big as this margin, but still, right? If we measure this, you can still make $1,300 with this trade, and it would have been the same exact idea, right? We shorted it right by VWAP with about a 30-40 tick stop loss above VWAP and our target based on where it went last time. I really think this will help with just thinking about risk, right? When you're getting in a trade, don't just put some theoretical stop loss in. You really want to put your stop loss where it would make sense for you to be wrong in the trade. Really, really big concept here. In the beginning of my journey, I was starting to get stopped out on trades where I ended up being right on the trade. I just didn't give it enough room. And I think this can really help with that win rate if you start giving smart stop losses instead of just theoretical stop losses based on the dollar amount. So really hope this video helps. I think it'll help control and really just help you with the thought process on risk management. And this will help you hold on to trades longer, especially when you make sure that entry is good with trading. So thanks everybody for the time today. We will be back at it in the next session. Thank you.